Hello.
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 Hello. All right, we're going to get started. It's a couple minutes after. I think we've got considerable amount of people online, both as committee members and interested parties. Some of these measures have gotten some national attention. So
Look
with
at
that, Marin. All right, Mandisha, you want to pray? You want to open us up? Okay. All right, I'm going to ask Mandisha Thomas to open us up in prayer.
Thank you, Almighty God. Thank you for this day. Thank you for the intellect that you've given us to hear these bills clearly and to make sound decisions. Thank you that we have the ability to move forward and to move the state of Georgia forward with good legislation. And I appreciate you coming before us and being with us at this time. Thank you. Amen.
Amen. Thank you. Okay, here, the agenda was going to be the misclassification first, but Todd he's involved in a lot of stuff. He has to think he goes second. So with that, here's going to be the posture. We're going to hear the earned wages access bill first, but when Todd gets here, we're going to probably table that bill and come back to it because it's gotten pretty long and complicated. So with that, Kirby, and make sure you announce what LC, because as of 30 minutes, that changed again, but the members should have the most current member, thanks to Brian, Vanessa, and everybody else. So Tom, all yours.
Am I all right here?
Yep, good.
All right, we're working off LC 500196. It's House Bill 674.
Hold on.
LC
Yeah, it should be back to, that's banks and banking legislative.
Yes, I got that one too. I'm
All right,
sorry.
that is it. This thing floated almost.
No. I don't have that one.
4.6S, isn't it, Sean Marie?
389.
Oh, I'm sorry. I apologize.
All right, let's get on the right bill first. We are on 674, correct? Yes.
We don't have a sub for that. Okay, so we need a sub for that then. I'll get some copies.
Okay.
Do you have a copy of that one? Please, yeah, I'll get a couple of copies now. Sub is 45S, not 46S. It was I was saying the sub for Todd Jones' bill. Or it'll be different for securities.
So interestingly, Nick, they almost have the same last three digits.
We'll get that done now.
Yeah, while we're waiting, because we'll talk about substantive changes, but Todd's going to give Tom is going to give a high level view and what the bill is attempting to do, and he can even talk about some of the changes while we're waiting on the most current one. Because like I said, two of these are in the last 30 minutes.
All right. Thank you, Mr. Chairman. And in this bill, and what we're attempting to do is to make sure this is not a loan. It's not a pay advance. This is just another way of paying employees. This is an industry that's in its infancy, I think. And what we're doing as we walk through this, it's one thing to write a bill that'll work in 2021, but we want a bill that'll work in 2031 and 2041 as well. As more players get into the market, as more people want that instant pay access to the wages they have earned already, You know, we've seen the rise of Venmo and PayPal, and there's so many different ways that we're transferring money back and forth to each other now. It's just kind of the next evolutionary step. And that's what this is all about. It's not a loan. It's getting away from any kind of payday loans. There's not high interest rates, or anything like that. So anything that we're doing is to make sure it's not a loan, not to be confused with a loan. It's not a pay advance. It's not somebody getting an advancement on their pay. That's actually getting their pay that they have earned. All right. I don't know if a small business would be in a more competitive advantage if they could pay their employees every day, but if they couldn't have a service out there that could pay them every day, that might be a benefit for them. It's, as things continue to change in this society we're in today, and more cashless transactions, we're going to see a lot more of this. And that's what we're working on. Okay. And that's what this is about. The biggest change I think in here, and it's one that that was originally, when this was really brought to us, was something that they weren't looking for, and that is we're concerned about the usury laws. And if charges get too high and those violating that, even if it's not intended, that they set a fee to do this for an employee, but then the amount of wages they earn for a short period of time or whatever it is, all of a sudden that fee, if it's not moving somehow, could cause a problem. And we don't want that. We think there should be some consumer protection. So what we did is we actually went to another part of the code section dealing with check cashing. And right now that check cashing, we say 5% or $5, whichever's higher. So that's the cap we put in there to protect the consumers. We think that's a reasonable starting point. And we realize, as everything else, this is a process, and that could change. And I know some don't like the cap and weren't interested in the cap, but I think if we're going to protect our consumers, I think it's the right thing to do. So that's one of the biggest changes you're going to see in this bill. We also took an awful lot out to answer the questions from banks and banking, and Bo Fears and the testimony you heard, to make sure nobody's confusing this with a loan or any kind of loan. So all that's been removed. Because this is something, as he said, has been going on for a couple of years. It's not required to do this activity. There's no legislation really required to make it legal. It's a legal activity, a contractual activity that the three parties could be into anyway. All right. And why? So the question is, why do we do this? Well, those that brought it to us want to make sure that they're not being confused with payday lenders or payday loans, that they want to make sure everybody understands this is not a loan. And by putting it in code section, that's one of the best ways to do it. Also, big companies, larger companies, their legal departments, they like to see things written out to make sure everybody's on board and how things are being done. And so that's the reason for the bill. And that's really all we're trying to do with it. And I think when you get to when we walk through it, you're going to see those changes made are clearly designed to get us to that point. And I think another thing that talking to Bo Fears said, and he's right, we don't start off regulating a lot of things right out of the gate. We think somebody comes up with a good idea. Obviously, this is an industry I think is going to continue to grow. If we put in a bunch of regulations, may or may not be needed, we may artificially change the direction of what they're trying to do and what could be good for the people of Georgia. So typically what we've done in this state is allow these things with some consumer protection to move forward. And then down the road, if we see there's issues that need to be addressed and regulated, then we can come back and look at doing those later. So with that, we'll wait on the bill and go over the specifics.
Yeah. And I don't mind if any of those online want to go ahead and speak. Is that Representative Pruitt?
Thank you, Mr. Chairman. And just to clarify, this doesn't put any additional burden on a small business to have to keep up with something else or communicate externally to another company about. I'm not really familiar with the process. I understand the concept of it, but this other business that's going to be paying out on yet to be earned wages, or that they've already earned but they haven't received funds from, do they have to verify this with a small business or anything, or is there's got to be? I would think there's some communication there.
Yeah, and thank you for the question. Let me maybe walk through it a little straightforward. Number one, no business has to do this. All right. So you got an employee, Casey Carpenter, works for you. All right. And Casey, he wants to be paid every day. And you pay once a week. And Werkheiser Inc. has this earned wage access company. So Casey goes to Werkheiser Inc. and says, hey, I'd like to sign up for your service where I can get paid every day from Mr. Pruitt. So then they have an agreement on how they're going to do that. And it cap in on the one that company we're talking about, that transaction be $1 cost. Casey giving up $1 to do that. All right. So then Werkheiser Inc. is going to come to you and says, hey, one of your employees would like to do this. We would like to enter in this agreement where you supply us his payroll information, his earned wages, that we can take care of it. And you make the decision, you know, that's too much extra work. That's not something that fits our mold. We don't want to do it. Now, Casey, as an employee, makes the decision whether he stays to work for you or goes to work for Uber, where he gets it on his phone as soon as he picks up somebody. You know, but that's his decision, and it's you as an employer, your company's decision to decide, yeah, we'll participate, or no, I really, this isn't for us. So again, there's a contractual relationship between you as the employer and the company doing the paying, and then a different contractual relationship between your employee and the company that would be paying them their earned wages, as well as the typical contract for work between you and your employee. So it's this triangle, but you've got the right to say no.
So you want to go through those sections?
All right. So we are LC 364745S. All right. Of course, the first section is all of the definitions of everything we're talking about in here, the earned wages, the services, and trying to identify who's who and all the players in this. All right. If you get down onto line 37, this is where we talked about what we're just talking about. They're going to verify the consumer's wages earned. That's where the employer has to agree to step in and say, okay, I will give you that information. He's signed something allowing me to give you his information or her information, and this pay period, that whatever we're dealing with, you know, you've agreed that you're going to supply that to the earned wage access company. Then the earned wage company, it talks about how they'll deliver that starting on line 39. And then they talk about anything that the earned wage company didn't already pay, then it would be paid in their regular pay cycle. That's maybe some differences, and they can't pay the total amount, or they don't want it, or however, you know, whatever the agreement is, it can be different for individuals. Then let's see, like most of you, this is the first time going through this version, so I'm making sure as I go. All right, then we get into, starting line 53, 7-10-3 is this is the whole thing, how it's set up with any fees and how much it's going to be cost is all put on the front end. And on page 4, line 65, this is where we put the cap for those fees, where it's such transaction fees not in excess of 5% of the wages or income earned by the consumer for that pay period are $5, whichever is greater. And that's straight from our check cashing code section of current law. We figured that was a good starting point. Then the next section, they're not going to be any hidden. I mean, very clearly, we're not allowing any hidden fees, fees, taxes, services, charges, whatever you want to call them. I think we try to cover every base to make sure they realize it's all done up front. The employee knows exactly what they're going to be charged for this service, and there's nothing going to come in later on. And really, that's the bill. I mean, as we took all the other stuff off, we answered all the questions from Bo and the banking, put a cap on there to protect the consumers. It's not a regulated business, but it's a business that's already happening. Just Now, not to say that, like I said, I think this will work for 10 years down the road, not to say that if bad players come into the market, that we wouldn't be back here looking at what kind of regulatory impact we need to put on it. But today, I don't think it's needed.
Gonna go to Casey Carpenter. I think he pays in Bitcoin.
I wish I did. It'd be a lot cooler if I did. So a couple questions real quick. Let's talk through the process. Does the business itself get a kickback from the company that's doing this? So does the company come in and pay, hey, I'll give you a percentage of whatever we collect off the employees. So that's okay. So it's a clean relationship on that side. How does the money get to the employee? Is it a credit card, debit card?
It would have to be in one of the 4 ways that the state allows, that the company decides, that's the bill we passed a few years ago. It could be cash, check, money network card, or a direct deposit.
Okay. But I mean, as it's processing now, because I'm not familiar with it happening now, is it typically a credit card or debit card, or how do they?
I don't have that data, but I'm sure my guess is it's an electronic transfer, either a direct deposit or onto one of the money network type cards.
Okay.
And we've got one of the larger players that's about to testify, and they can probably answer that.
Okay, yeah, I'll just wait till the end and we'll
Okay.
do some questions. That's fine.
All right, we had a couple of online before we come down that way. All right, Representative McLean.
Thank you, Mr. Chairman. And I want to say thank you very much, Vice Chair Kirby, for bringing this piece of legislation, because I've always been concerned about payday loans and the interest fees and things that they do with workers. I do think this is something that's needed. I just think that we just need to tighten up the fees, as well as making sure that the worker, gets a big portion of his earnings. I don't know if I have to, that's a question, more of a comment, but I heard Representative Carpenter also, you answered my question, because I wanted to know if it was timely. When I say timely, if I need the money today, you said I would get it in a credit card. So I guess within 24 hours, I would get paid. I guess that'd be my question.
I think our first testifier is going to answer most of those questions. We're going to let him walk through the process.
Thank you, Mr. Chairman. That was all I had. Thank
Okay.
you very much.
Representative Kennard.
Okay, can you hear me, Chairman?
Yes.
Okay, thank you for the opportunity to speak. I am going to keep an open mind as I hear our guests speak on the bill, but right off the cuff, I have significant problems with it. I think it opens the door for exploitation. And also, as someone who works in with individuals coming from poverty, we have a homeless organization. So I'm working with about 70 folks, moving them from mindsets. One of the problems we have is moving from short-term thinking to long-term thinking. And I know a lot of folks who are coming my way, or if they had an option of just getting their money every day, they would, and not be able to build an abundance mindset and long-term thinking. So I'll be open-minded as I hear the testimony, but I just, at this moment, I don't like the bill at all.
Okay. Is that Park or okay, Representative Park?
Thank you, Mr. Chairman. Thank you, Representative Kirby. Again, I think it's an interesting, innovative approach to providing access to capital for workers. I did have 2 questions. First, you did mention, is there feedback or do I sound
A little bit.
I'm going to cut you down just a hair. Go ahead.
Thank you. So Representative Kirby, you mentioned that this would be something like Venmo or Cash App or a digital app. Under current law, would an employer be able to enter into an agreement with a Venmo, a Cash App, or an existing Cash App type company and provide these services? Because especially with those apps, I don't believe that they charge any fee, if I'm mistaken.
Well, specifically, I was using some of those examples as just some of the latest ways we've come across of moving money back and forth to others. I know my daughter in college is Venmo and everything and has to explain it to me all the time. So But to answer your question is, yeah, she where she works, actually is a server. The tips are at her establishment are pooled, and then they Venmo them to all the employees equally at the end of their shift. So that's something that just the employer is doing now. Now, as far as actual wages for pay, we put that, in our code. It's cash, check, debit card or money network card or direct deposit. A Venmo type app of instant thing is the same as cash, is what basically has been ruled, because you have access to it immediately, no different than you would a cash supply. So to answer your question, yes, it's allowed now as I understand it, and would continue.
Mr. Chairman, if I may ask a follow-up question. So again, Representative Kirby, to one of the earlier comments that you made, given that employers choose how to pay folks in the state of Georgia, if this bill passed, would employers require, or would they be able to require employees to accept this method, which may result in, either up to $5 or 5% based on whatever the cap is?
No.
Okay.
Because there still has to be a contractual relationship between the employee and the company doing it. And the employee would also then have to authorize the employer to share their pay data, which is typically kept confidential and not shared by anybody without the employee's authorization. So if the employee is not agreeing to let a company show it to this third party, then they wouldn't be allowed to do it. So they can't force it upon the employee.
Thank you.
Okay, and with that, if y'all allow me, I'm going to go to our presenter, because I think if he'll explain the process, then it may answer a lot of questions. So with us from California, we have David Reedy with Pay Active. Go ahead, David.
Good morning, Mr. Chairman, Vice Chair Kirby. Thanks for inviting me to speak. Can you hear me?
Yes.
Okay. I appreciate the discussion on this, and I'll just take a minute to explain how this service works and what the bill is designed to do. Currently, we believe that consumers should have options beyond expensive credit and overdraft fees between paychecks. And so an industry has arisen to provide faster access to money that's already been earned. And I want to just emphasize 2 points there. There are many solutions in the market. There are many great products, direct-to-consumer products, business-based products. We take no position on all those other options. This bill is designed to address one product, and that's an employer-based embedded earned wage access solution. And so what does that mean? That means that a company like PayActive signs a contract with an employer, and through that contract, we become integrated into the payroll system so that we can see how much somebody has earned in real time. And if that person wants to get access to the money that they've already earned, that appears on the app and they can request that money. To answer the earlier question, that money can be sent to any card, any bank account, and it's an electronic transaction. PayActive charges a fee, as most companies in this space do. And we are strictly in the business of employer verified earned wages. We are not estimating how much somebody has earned. We're not advancing against future earnings. This is purely an employer integrated solution. This bill does not weigh in on any other product, and we've learned from prior legislative efforts. There was a bill in California that tried to cover every product under the sun, and it sank under its own weight. So we've tried to keep this very narrow, because as Vice Chair Kirby said, companies like ours are trying to enter into a contract with an employer to get this employer to make the service available to employees. And many of these employers are competing with the gig economy, in which hourly workers can go work today, drive today, get paid today. And so businesses have a need to provide faster access to money that's been earned. And so this is an employer-based system. This bill only addresses those payroll integrated systems. We support other legislation that deals with other models and other products because there's a range of products in the market. But we've drafted, we've supported a narrow draft here because that's what we believe makes sense for this product. I'm happy to answer any questions, but I think that Vice Chair Kirby pretty much covered it.
Representative Holly.
Thank you, Mr. Chairman. And thank you, sir, for appearing live from California.
Thank you.
I'm sure you're familiar with, I guess, does he have the substitute then? Or probably not? Or
Do you have the latest version?
I don't believe I have the latest version, but
okay, that's all right. If you don't mind, since this legislation is similar to what you already have enforced in California, has there been some mechanism in place in case the service provider actually does have kind of hidden fees or charges? Does the bill in California have any way to police bad actors?
So just to be clear, the legislation in California didn't pass. It just became bloated with too many things. Instead, most of the main earned wage access providers have an agreement with the regulator in that state, the Department of Financial Protection and Innovation in California. We provide data to the regulator. The regulator can review pricing. And so that's what's happening in California. But let me just say this. We are in a competitive business. We are trying to land deals with employers, and that competitive pressure has driven costs down. I can only speak to Pay Active, but I can tell you that our service is free with a payroll card or $1 per transaction to get the money any other way. There are no hidden fees, recurring fees, interest. It's pretty straightforward. And it needs to be because we're competing for those contracts, number one. And number two, we are talking to the federal regulator, the CFPB. We have conversations going with state regulators. And so there's no catch here. It just doesn't work that way.
Okay, thank you.
Thank you, Mr. Chairman. Thank you for your testimony from California as well. One question I had was how many companies currently offer this product?
So I can't speak to other companies. We have about 1,500 companies under contract with Pay Active around the country. We're in all 50 states. Walmart is our biggest customer. But I don't know that there is really reliable information on what percentage of employers in the U.S. are offering this. I can tell you that it's growing. And I think one of the reasons that it's starting to take on is not just that competition with the gig economy, which is a different sort of economic model, and there's a real draw to have people work in that economy. But also because we've seen and we've done studies. There was a Harvard study that shows that when you offer employees a higher frequency of pay for the money they've earned, it reduces turnover. There's actually quite a big problem with turnover, particularly among hourly and lower wage workers. They change jobs a lot. And so every time you change job, you start over, you've got to wait for that paycheck, could be 3 weeks away. And then so you get into this, cycle of mismatch between earnings and bills. And so more and more businesses are interested in this as a way of reducing turnover, frankly, and competing in a kind of more diversified job market.
If I may just clarify, thank you, Mr. Chairman. So the question I was trying to get at was how many companies offer this employer payroll integrated solution? Not how many employers are using your service, but how many companies like yours, given how innovative this is, exists? And that goes to whether or not this legislation would essentially allow for one player to enter into the state of Georgia.
Yeah, sorry, I didn't understand the question. I appreciate that. This is not a one-player bill. Just looking on my screen here, I can see a representative of Daily Pay, which is one of our big competitors, Matt's a friend. I don't know what the number is. I think there are 4 or 5 sort of major players in the employer-based earned wage access business. I can tell you that it's an area of high interest, and more startups kind of pop up all the time who want to do this. And I think that's one of the reasons to codify the rules. I'll also point out that some of the big payroll providers, Ceridian, ADP, have made noises about offering this themselves. And we actually have a partnership with ADP where they offer our service to their employees. So this is not a one company bill, if that was the question. But to specific to your point, I'd say there are kind of 4 or 5 major players right now, but it's a fast changing landscape. I can say that.
Thank you so much.
Representative Carpenter.
Thank you very much. Appreciate you, sir, for coming today or coming online. How many states do you guys operate in right now?
We're in all 50 states.
And what is the typical cap, the average cap in those states, roughly? I know it's across the board, I'm sure, but
there's no fee cap. There's no current legislation in the U.S. specific to earned wage access services.
okay. And then I have a question about the agreement or the contract with the employer. Is there any backdoor agreement with the employer as far as you guys offer a certain money to the employer to be able to offer this service to their employees, or is it, how does that negotiation work?
So the contract with the employer doesn't have any sort of fee sharing or anything like that. I think I don't want to speak to other companies, but I'm sure there are agreements to spend marketing dollars to promote the program. But as to a specific transaction, there's only one fee charged by the earned wage access provider to the employee for that transaction. There's no related fee or percentage or anything with the employer. And in fact, we offer, and I think most of our competitors offer this service to employers for free because we're asking them to do some work and integrate us into their system. The incentive for the employer is to provide a benefit to employees, so there's no cost to the employer.
And I definitely, as an employer, see that benefit because, in the restaurant business, we pay every week, but it costs us a lot more to pay every week than it does every 2 weeks. But that's kind of an added bonus for that lag when you seek new employment. And I also see the value of me versus somebody that works for me coming to borrow money on their paycheck every week, which happens. Legally, I'm not necessarily supposed to pull that out of their check the next week. It's a little gray area in the law, I believe. So with this agreement with the employee, I see the benefit. I like most people, I'm a little concerned with payday loans and getting people upside down. Does the money come out of the next check, or do you space it out over 2 checks, or how does that work?
It comes out of the next check. So we're only dealing with money that's been earned within a pay period and settled within a pay period. And so you don't have, borrowing against future paychecks or anything like that.
Well, yeah, I understand. I just meant if somebody's already earned $300, they borrow $200. Can they space that out over 2 checks because they've earned that amount? I guess
we don't do that, and this bill would, I think, require settlement within the same pay period.
Okay. Yeah, I think that's it. Thank you very
All right.
much.
And just so everybody know what order for the members, I've got Pruitt and then McLean online and then the author. Or whoever, 14. Who down on that end? Okay, go ahead.
Yeah, just a quick question. How do you protect the employee and employer data? It's not really the scope of this bill, but how do you protect those data that you receive?
Yeah, so we have data security standards in place, and we are only receiving a limited amount of information about time and attendance. And so, so it's a secure data stream, but most of the data that flows is anonymized until somebody downloads the app, identifies themselves, and allows you to tie into their payroll stream. But we have data security, the highest data security standards in place. We also have a privacy policy with the end user, so we have an agreement with them.
Okay, Representative McLean. Okay, you might have had that previous hand raised. Vice Chair Kirby.
Thank you, Mr. Chairman. One thing, I want to correct something. You said there is no borrow. They're not borrowing money. It's money they've already earned that they're being paid. Yeah, so.
Yeah.
Okay. Well, now, okay. And then the one thing I want to add a little bit, just from an employer seat for a second. Somebody asked me one time, well, why wouldn't the employer just do it? Because they could. As a major corporation with 20,000 employee partners around the world, we like consistency. We want to be able to pay people consistently the way it fits in our service. That's the way we save money, and the way we make money is by being able to do it the same way. So now I've got employees that would like something different. That's where a pay active or another one of these players comes in. Other than supplying them the data, my payroll system for 20,000 people around the world stays the same. All right.
Okay, let's do this because maybe it'll answer some of the questions, and I'm going to grab this chance with, I don't see any lights. For those of you online, are there any of you, I don't see any hand raised, or either in the comment box, because I thought there was somebody in the other space wanting to speak. Okay, Matthew Kapka, tell us who you're with so we have some context. Okay, and then present.
Thank you, sir. Members of the committee, Chair Werkheiser and Vice Chair Kirby. My name is Matthew Kopka, and I'm the Vice President of Public Policy at Daily Pay. We consider ourselves the nation's leading earned wage access provider, though we are constantly sparring with PayActive over who holds that spot. I have just received and have not fully processed the latest draft, and I note it does appear like some material changes have been made, some of which we do think are unnecessary, but on the whole, this is very thoughtful policy. Daily Pay works with large employers nationwide, including Target, Kroger, Tractor Supply Co., DaVita, McDonald's, Dollar General, and other leading corporations. We provide software and a solution that enables these employers to pay their employees as frequently as daily without disrupting their existing payroll processes. Employees love it because they no longer have to resort to late fees, bank overdraft fees, pawn shops, or predatory loans to make ends meet. Like an ATM for your paycheck, if your employer has Daily Pay, you can access your own already earned money and nothing more, so it's not a loan, in a verified and trusted environment, all for the cost of just a couple dollars when and only if needed. I must note that recent changes like the introduction of a price cap are very concerning to us. Venmo, Starbucks, and almost all other private actors do not have their prices set by the government. Now, our standard pricing is just $1.99 to $2.99, but this would be one of the first bills nationwide on this topic to introduce a cap like this. And introducing the presumptive right of the government to price cap a private voluntary service is a very concerning precedent for our industry, for the nation. Perhaps instead on this point, the legislature should study fees over the next year, and then when convening next year, decide if any additional legislation regarding a fee cap is appropriate. Similarly, employers love the service because it increases employee retention, productivity, and happiness. And being able to offer a daily pay benefit is a big attractor for talent in the 21st century. To the extent this bill stays B2B only without caps, it is very narrowly tailored and is smart policy. It is small in scope, and it affirms the growing consensus among regulators nationwide, namely that employer-based earned wage access services are a valuable and innovative technology to save workers money. These services can really only be provided by employers in an enterprise environment, and as required by this legislation, including full data and payroll integration with the employer. This results in a verified service among three critical parties: the employer, the employee, and the EWA vendor. When you provide employees real-time access to their wages, the employer is a critical element of this transaction. This bill includes important consumer safeguards and, critically, protects against general solicitation of the public by controversial fintech companies who do not integrate with employers. Put simply, you cannot have earned wages without the wages. That is the employer. As introduced, this bill is consistent with every other state's approach that is currently considering legislation on the topic and is also consistent with federal guidance in the space. It protects consumers and does not unduly burden the industry and puts Georgia in a national leadership position, embracing pro-worker technology that employers and employees have come to love. Thank you for your leadership, and I'm glad to answer any questions.
Thank you. I'm going to ask for the third time, just for clarification to our expert. If, Bo, you can just shake your head or nod your head. If we were to remove the cap, this bill, we would have to add significant language, and it would probably leave this committee and go to banks and banking. Is that correct? I like the first answer first. Okay, we had a lot of lights light up, but I'm going to continue with, because maybe some of these presenters will answer your question next, and I'm not going to attempt the last name. Ms. Sangeetha, tell us who you are, who you're with, and then go ahead.
Hi, good morning, and thank you very much for the opportunity to speak. My name is Sangeetha Raghunathan. I'm General Counsel and Chief Compliance Officer for Earnin. Earnin is a fintech company based in Palo Alto, California, founded to empower consumers and to provide them with the tools that they need to work towards financial stability. Before I jump into my testimony, I'm happy to answer any background questions, or I can kind of dive into our point of view.
Go ahead.
Great, thank you very much. Our direct-to-consumer earned wage access product, Cash Out, enables workers to get paid right after they work, while providing an alternative to payday lenders and the ability to avoid a cycle of debt. Earnin has more than 1.3 million active users nationally, including more than 67,000 customers in Georgia. Earnin is not a lender, and our Cash Out product is not a loan. We do not charge interest or mandatory fees. Users only pay what they choose with voluntary tips. And we do not have a legal right to demand repayment from our users, which means there are no debt collectors, no reporting to credit agencies, and no fines. The purpose of our tip model is to be able to provide a no-cost option to workers to access their money whenever they need. This consumer-first approach aims to make financial stability attainable for everyone. 49% of our customers report that they can now afford a $400 emergency where they previously could not. Earnin uses multiple highly accurate methods to verify workers' hours and wages, and accurately calculating people's earnings is critical to our ability to offer the service and operate the business, since we bear the risk of loss if a customer cannot repay us. Customers choose Earnin because our method doesn't raise the same privacy concerns as an employer integrated model might. We support regulations that protect consumers' interests and affirm the basic principle that all earned wage access providers should play by the same rules. While HB 674 is well-intentioned, it fails to meet these standards and would harm consumers and disadvantage small businesses, employees, teachers, and government workers, leaving them without key financial empowerment tools. We are asking that you oppose HB 674 until it is strengthened to include direct-to-consumer providers and basic consumer protections. At a minimum, the legislation should be strengthened in the following two ways. Number one, as drafted, this is a one company bill. It picks winners in the B2B providers and cuts out B2C providers. We ask instead that Georgia treat all EWA users and providers the same. Otherwise, this puts our 67,000 active users, many of whom are small business employees, at risk of losing the service if their employers don't offer a B2B EWA benefit. And this currently serves as a lifeline to them during trying financial times. 67% of our customers surveyed report a decrease in overdraft fees once they start using the Earnin service. Representative Pruitt did ask about the burden on small businesses, and this is why it is crucial the entire industry is considered and not just an employer integrated provider. Earnin provides a particular benefit to small business because it is a direct to consumer EWA provider. We do not require expensive and complicated back-end integrations with employers. and we work directly with the consumer and not the employer, and that takes this burden off of small businesses. This is why direct-to-consumer providers are so crucial. Number two, we would like to close the back door to payday lending and bad actors. The primary difference between EWAA and a payday loan, according to the 2017 CFPB Safe Harbor provision, is that the EWA service should not charge workers a mandatory fee to access their own earnings, and the service must be non-recourse. The current bill allows providers to charge transaction fees. We heard Vice Chair Kirby mention a 5% cap. It's critical that the methodology and the types of fees that would be included in this cap be carefully discussed. The bill should also state that if an EWA service charges a mandatory fee or requires a legal right to repayment, that type of service should be considered a loan. We welcome the opportunity to speak with you about how to strengthen this legislation and ensure that there is a critical financial tool that can serve as a lifeline for workers. Similar to what a prior witness mentioned, we are in agreement with California's regulatory authority that allows us, Earnin, as a direct-to-consumer provider, to operate in California, and under which we provide regular reporting about usage and operations of our product to the California regulators. As a final note, this same bill has also been proposed in New Jersey, New York, and South Carolina, and has not passed because of the unintended consequences of acknowledging only half the earned wage industry and just lacks consumer basic protections. Thank you very much, and I'm happy to answer any questions.
In order, we've got Todd, over here on the right, Holly, and then Kirby. Okay, Representative Todd. Are you 9 or 10? Try 9.
Hello.
Okay.
All right. Darth Vader. This is to the gentleman who, my apologies, Mr. Chairman, the one addressed previous to this.
Okay, David Reedy.
David
Pay
Reedy.
Active.
Is Mr. Reedy still on?
Yes.
Okay.
I'm here.
Yeah, Mr. Reedy, if you could, do you happen to know the average and the median payroll amount that is typically, I call it factored, borrowed, advanced?
And that can go to either Reedy or either one of y'all, the two that are vying for the biggest player.
I don't have those numbers with me. It tends to be in the kind of $60 to $100 range.
$60 to $100 are wages?
If you're asking
Are
the
you
amount
asking about
requested
earned
versus the
wage?
paycheck.
I'm asking about the paycheck, the amount that's being, again, I know you don't want me to say borrowed, but
Advanced.
I don't have those numbers.
If I could respectfully ask for those numbers, because it's difficult to understand what that 5% means. In the tech industry, that's a big number, and in other industries, it's probably a small number, but it would provide us context and allow us to make a more informed decision.
Okay.
And then the last one I'd like to ask, Mr. Chairman, this last question, I believe it's Mr. Reedy. You said something about the government not playing a part in the free market, which, by the way, I completely agree with. I think we should just make the floor of the Roman Colosseum and let free market go. But unfortunately, we have some bad actors. Are you suggesting that we should remove our usury laws?
I didn't make that.
That was not Reedy, that was the second.
That was me, sir. Yes. So I think
usury laws in Georgia.
my view on this, sir, is that in a verified employment-based environment, there hasn't been any sort of assertion of a need for price controls here, and we are open to regulation. We just think that the number chosen in the process may need to be informed by some sort of process to determine an appropriate control if it's needed.
Thank you.
Forgot who I said was next. Holly.
I guess this question for Mr. Reedy, or actually for anyone within the space within which this has been enforced. How do you deal with deductions? Because I'm sure just you getting paid, you get that advance. For those that are, if you have child support obligations, if you have healthcare deductions to that, does that come from do you split the cost and it comes from the, some up front, or is it all on the back end?
Different companies have different models. In our model, we settle earned wage access amounts through a payroll deduction that is prioritized last. So if you have child support, if you have wage garnishments, anything like that comes first in the order of deductions, and then ours is last. There are other ways of doing it, but this bill would address the requirement to settle these transactions on payday. And I'll just, if I may, address Sangeeta's comment. I don't view this bill as outlawing any other product or closing the door to bills that clarify other products. And I don't think, as it's written, it does that. We're trying to clarify the ground rules for employers who want to offer this service to their employees. They want regulatory clarity. They want some assurance that this is legit, and that's what's driving this.
Okay, who was it? Either Hill? Oh, on this. Okay, Representative Carpenter.
Thank you so
And
much.
you can address me as Your Honor as well.
Your Honor. Your Highness. Head honcho of all the names. Speaker number 3, I apologize. I didn't catch your name, but I just wanted to understand your business model a little bit. You said your relationship was with the consumer, but you didn't charge the consumer a charge. Where's the money coming from in your business model?
So I think I'm speaker number 3, just to clarify.
You are.
All right. Sangeeta.
With the beautiful trees in the background.
Absolutely. Sorry about that. It's pronounced Sangeeta in case you're just so I can de-anonymize myself. So we have a contract directly with the customer, and we operate on a voluntary tip model. That means that a customer can choose to pay us nothing if that's all they are, that's what they choose, or they can choose to tip. We've been in operations for about 8 years nationwide. And we find that this voluntary tip model works for our consumers. There are times where they may not be able to afford to tip, and that's perfectly okay. And then in instances where they've used the service and they find it valuable, they can pick an amount of their choosing. It's very transparent. That is the only fee that we would have in our service. And after 8 years, we find that this is actually a service that customers really value and choose to tip if they want to.
Perfect. Thank you so much. That's interesting. Nice model.
Thank you, Mr. Chairman. Sangeeta, kind of following right along with what Representative Carpenter asked. All right, I understand the tip model and what you're doing direct to consumer, but you're getting money from somebody to pay them. If it's not coming from the employer, if you don't have an agreement with the employer, you're not just taking the $100 they're going to get today out of your pocket and hope they give you a tip. Where does that money come from?
So that's a great question. So we do have to capitalize the business, and so we do have agreements with for ourselves to be able to raise that capital. That money is then remitted to the customer, and then similar to the B2B providers, the transaction is settled on the customer's actual payday. I'm not sure that in every instance, even in the B2B provider space, and I'm not going to speak for either Matt or David, that they are getting the money directly fronted by the employer initially. So many of the providers in this space do have a capitalization structure to be able to advance the funds. But probably a great question that they might be able to address for you as well on their end.
Well, I understand they're getting it from the employer. That's pretty simple, but I don't understand.
No, that's.
If you got a contract with the employer for their wages, that makes sense. But just to run a business where you're going to raise capital not coming from the employer who would have been paying the wages anyway, and just getting tip money, this simple country boy doesn't understand how that balances out and you make any money.
Well, I'll let Mr. Reedy address kind of the B2B provider, because I'm not sure that's quite exactly how it works, but I'll let him address that.
Yeah, thanks. So just to be clear, we fund, at least in Pay Active, and I think this is true across the board, we fund the earned wage access transaction at the time of the transaction. But if your question goes to where does that money come to settle that transaction, in our case, that does come from the employer on payday. But we're funding the transactions in real time ourselves.
Well, yeah, I understand. I'm not worried about the what you do on Monday, because it's going to settle up on Friday or whenever payday is. But on the consumer direct, I don't understand if they're not getting money on when they settle up with the employer. I don't know,
I'm sorry. Let me address your question. So what actually happens in our model is that we will remit the a portion of the requested funds to consumers prior to the payday. On the actual payday, the employer, you don't change your direct deposit, right? So your employer will deposit your paycheck on your payday into the bank account. After the funds are deposited, then we just have a transaction to settle the amount that we call cashed out. So the wages are coming to the employer, and then after it's deposited, just like any transaction would settle when there's funds available, we would just settle ours as well.
So the employee is paying back the money you'd already forwarded them when they actually get paid, and a tip or not, depending on.
Exactly. Yeah. And they can cancel the debit if they choose to ahead of time. That's within their power. And if they don't choose to tip, that's okay as well.
All right. And then I know you don't have the latest sub. I can't see anything in this bill that would prevent you from continuing to do business like you're doing right now in Georgia. Can you tell me specifically what I'm looking for in here that would say that?
Well, so I don't have that bill in front of me either as well, so apologies. But really what I think happens is when there's a piece of legislation put in place that kind of puts the imprimatur of legitimacy on one type of offering. I think by nature, like that business type is then favored. We believe that all providers should be treated equally in Georgia. And so that is really the reason why this happens. It's like, if the government says, well, we're going to affirmatively state that Pfizer and Moderna are the better vaccines, and we're not going to make any statement about Johnson and Johnson, for example. In that situation, it casts a lot of doubt. And again, just like any other provider in this space, we would like to operate with certainty. And that's really what legislation does offer to us as well. And we welcome very reasonable regulations. We've worked just similar to the other businesses. We work with regulators across the space to make our business model transparent, but it serves to help us also with our business operations if we have certainty as well. And that's what legislation does offer.
All right. Well, right in the bill itself, it says earned wage access services, which I'd say all three of these companies are, means the underlying transaction that any services related to delivery of funds to a consumer that represent earned but unpaid wages or income, period. That sounds like what you.
And I apologize, I don't have the language the latest in front of me, but I think as other witnesses noted, this bill was written specifically for employer integrated models, which is not who we are. And so I think the way that it is drafted would not give that same certainty to a direct to consumer business.
Yeah, I don't think the bill excludes you, and if it did, you can find a member of this legislative body to bring a bill. But in fact, of interest, of the three people who have testified, all three of y'all are doing this right now and can continue to do this with or without this bill. So I just want to make that clarification. I think we got Representative Park.
Thank you, Mr. Chairman. Sangeeta, I was wondering, do y'all provide services in Georgia currently?
We do, yeah. We have 67,000 users in Georgia.
Okay. And just to Vice Chair Kirby's point, on line 72 of the bill, it does state that earned wage access service providers shall not solicit tips or other contributions, which may undermine your ability to continue to provide services in the state. Just to note that. I did have an additional question for one of the two first speakers. But in all the states in which y'all operate, are y'all also prohibited from seeking legal recourse in the event that there is a discrepancy in payment and I'm on line 73 to 78 of this bill. But in all 50 states, again, for the employer-based urged wage access service providers, are y'all prohibited from having legal recourses and prohibited from engaging in debt collection activities?
Thanks for the question. Under our contracts, we are, but there's a lack of legislation. So I don't know if prohibited is the word that I would use. Our model is a non-recourse model. And the CFPB has stated that that's one of the important reasons that they don't treat this as a credit transaction. So that is a critical feature, the non-recourse nature of the transaction.
Thank you, because I find that to be an interesting benefit to, again, workers and consumers as well. Of course, I think additional time, to study the unintended consequences is important, but thank you.
Representative Carpenter, and this is the last one. Unless you want to make a motion, because we're in that. We need to move to the next one.
Whatever I am. I just make a motion that we table this and discuss it further as we move along. I do definitely appreciate the business model, but I think we should need to be careful as we start to tinker into this line of business until we got a full grasp and full understanding, because I would prefer to see some actually lower caps. And I know everybody's got a little heartburn on that, but I do think that with a no risk factor, if you will, on it, it definitely needs further discussion.
All right, all in favor of the table, say aye. All opposed? All right, the bill is tabled. Representative Chairman Todd Jones is going to present House Bill 389, committee substitute, and this is LC 364746S.
Yes, sir.
Okay. You are up.
Thank you, Mr. Chairman. Before we get going, we don't always recognize Leg Council. They do a lot of work for us, especially as we get crazy towards crossover and sine die. And I think it's very appropriate. Sean Marie has been excellent during this entire process. So I wanted to publicly acknowledge your efforts, your insight, and frankly, your creativity. So thank you so much, Sean Marie.
Totally agree.
Members of the committee, you should have two documents. The LC number that Chairman Werkheiser just noted, and then also the actual statute. We typically don't provide the statute when we're going through a bill. We lay that responsibility at your feet to go to LexisNexis, but given the context of the two changes we're going to discuss, I thought it is important that you had the actual statute in hand as we had this conversation. You will note that it is several pages long. This is something that this committee over the years has taken, I'll say, a significant effect on this statute, and it has grown and grown and grown. So what I'd like to do with the chairperson's approval, I'd like to just go through the two changes as opposed to the full bill. A vast majority of you have heard the changes as we've kind of matured the bill, so we can always take questions on the broader part of the bill. Is that okay, Chairman Werkheiser? Okay, so I'd like to direct you to line 13, F, except as otherwise provided in this code section, comma, services. The reason for this change is this: if you go through this statute, and I would suggest you start at G and then go all the way through, you will see a number of, I'll say, exceptions, carve-outs made for different, I'll say, different industries. So anything from motor carriers to realtors to, believe it or not, we talk about religious institutions, fraternities, sororities, you name it. There are a significant amount of carve-outs, or I say express provisions around certain industries within Georgia. So we wanted to make it crystal clear that we have no intent to effect in any way any of those that follow behind F, because we're affecting F. That's why I asked you to start at G and go down. So it was very important. We spoke to several stakeholders. They were concerned that this could be interpreted as if we were trying to effect below F. And we wanted to make sure, as you're reading it, starting at G, that that was not our intent at all. So this is where that language comes in on line 13. Second, I'd like to bring you to line 44. This code section shall not apply to Chapter 9 of this title. There was significant conversation with the workers' comp, I'll say, stakeholders on, I'll say, both sides of the issue, for lack of a better phrase. And there was a concern that by providing additional detail on how we're going to classify a W-2 versus a 1099, that would somehow creep over into workers' comp. That was not our intent. Workers' comp, as you can see, has its own chapter. And that's where we would like, and we intend for the judge and all the workers' comp to stay. So we wanted to expressly make it noted that this classification, I'll say clarity, should not in any way impact workers' comp. So those are the two changes, Chairman Werkheiser, from the last substitute, and I'm open for any questions.
We've got a couple people signed up to talk. Any questions? If we wait long enough, there'll always be one. Representative Kirby.
I'm sure he's shocked that I pushed my button, but no, I appreciate this and all the work we've done. And I too apologize for keeping Sean Marie up at night writing legislation, both on this one and the other one. So while I was enjoying a nice adult beverage and relaxing, she had to work. But on line 13, I understand what you did here. And as I looked through the full code section, which I'd been going through for a while, when it goes down to subpart N, small n, the term employment shall not include, and then 1, 2, 3, 4, after that deals with the, or in is the shall not include, and then you go all the way down to 16, excuse me, and that's where it gets into the drivers, the contract carriers, and A, B, C, D give the examples to fairly clearly, I think, show that the difference between an employee as a driver and a independent owner operator, like we see down at the ports that are pulling those cargo containers constantly. So I agree with you. I think that line 13 answers the question that we've had all along. And I think with that change, it does make a plausible change to our code and something we can support now.
Okay, thank you very much.
I don't see any other questions, but Mr. Brett Hume, come talk to us.
Thank you, Mr. Chairman. Chairman Jones for bringing this forward and the clarity and working with all the interested parties and their concerns. Ironically, all you're being asked to do is codify case law and by the Georgia Court of Appeals decision in 2012 that Representative Kirby addressed in the opening hearing. That's all you're really being asked to do. The addition is the penalties and the clarity that Representative Jones just identified. The most recent example and need for this is the email you all received as committee members from the TAG folks. Their questions and concerns are exactly the clarification this bill provides. Exactly. The employer is better versed on how to classify the workers, which was their major concern. And ultimately, this helps all businesses playing by the rules by creating the level playing field that we heard mentioned several times in the prior bill and testimony. So I would ask that y'all support this bill and make it a more level playing field that currently exists, because the winners in this legislation are obviously the worker that is better versed as to which classification he or she may prefer, the businesses' clarification on how they should properly classify their employees, which i.e. would include the proper deductions, and ultimately state and local government on the proper tax deductions that's being unrealized and uncollected. The fourth winner to this is the public overall, because this attempts to address and lower all of our contributions to the indigent care network, and it does address a piece of the human trafficking in terms of labor. So I would ask for your support, and on behalf of the over 20,000 construction workers that are organized in this state, This helps create the level playing field we're after for our contractor partners. Thank you for your time.
Any questions? I don't think anyone else has signed up to speak. Yeah, I would love to hear from some of you other folks. As soon as I said that, the board started lighting up. Number 4, no, Pat. Oh, hold on. Okay. Representative Park.
It's gonna, if there was no further testimony, I was gonna make a motion to do pass at the appropriate time.
Go ahead. Tell us who you are, who you with.
Sure. Mr. Dr. Chairman, Your Honor, sir.
You got all the time you want.
I'm Ed Crowell, and I represent the Georgia Motor Trucking Association. And I don't want to take too much of the committee's time. Obviously, they're ready to make a motion, but I want to echo Representative Jones' thanks to Ms. Story. She worked hard to help us get our concerns allayed and found an elegant solution to it. Really appreciate it. I like watching lawyers write elegant law. And also Representative Kirby. But I especially want to thank Representative Jones, who was very proactive in helping address our concerns. And Representative Kirby, you got it exactly right. Our concern was what might happen, and this language now prevents that from happening, has the, I hate the term carve out, the fine tuning of the law that affects the motor carrier industry remains as it is. It's settled law. It is considered some of the best law in the entire nation. And so the fact that it's being preserved allows us to say that we're glad to support this bill. And again, thank you for your work.
Come on up, Mark. I'm gonna start calling on people if y'all don't sign up.
Thank you, Mr. Chairman. Mark Woodall with Associated General Contractors. We represent the commercial builders. I'm here to tell you our industry does have a problem with this issue. There are folks that follow by the rules, and there are those that don't, and those that don't enjoy a competitive advantage. However, I will say this issue is as much about enforcement as it is what's in the law. And we can change the law down here all day long. If we don't enforce it, it's not going to work. You're not going to change behavior. So we appreciate Representative Jones bringing this bill. We agree with our friends in labor that there are folks that are playing by the rules and there are other folks that aren't. Thank you, Mr. Chairman. I'd be happy to try and answer any questions.
Got all kind. Representative Carpenter.
Thank you very much, Mr. Woodall. I appreciate you coming today. Question, currently as it sits now, how do you think this law would affect the price of construction in the near term as the market tries to evaluate the new laws and everybody tries to figure out how to play within these new laws?
I mean, I think the folks that are enjoying, in some instances, the competitive advantages aren't following the law. Right now, the market's gone berserk, particularly in the residential market. So I have no way of predicting what this would do on top of that already. But
and I think that's my concern. I think at this point, construction industry people have figured out that they're good players and bad players, but at the same time, everybody's kind of figured out the ebb and flow of this. And as construction is booming and people are paying $175 a foot for spec homes at this point, I'm just real concerned from an affordable housing standpoint and an affordability standpoint that any tweak in this system at a high point in the cost structure of it is concerning for all Georgians. I understand what we're trying to do, but I also understand this is something that's much better addressed when, unemployment's 10%. It costs, you can build a house for nothing. Let's evaluate that then. But when it's so high and we don't have enough construction going on, it's concerning to me.
Representative Park.
Thank you, Mr. Chairman. Could you clarify your and I appreciate your comments and of course for bringing up your concerns, but could you clarify your statement just because, the only thing this bill does is codify existing case law and provides a mechanism to enforce existing case law in the state of Georgia. So how would wouldn't that create greater certainty in the marketplace and again create a level playing field that wouldn't necessarily increase the cost of construction, since again, these are rules that everyone should be currently playing by. And if this bill provides for a greater ability to enforce existing law, again, wouldn't that...
Enforcement's the key.
Right.
If we implement these new changes and don't enforce it, we're not going to change anything.
Okay, thank you.
They're not here, but I will tell you with some of the conversations with some of the multi-state players with the Georgia Chamber has relayed that, because they are in a little bit better position to see the national landscape, and their concern with this is that one thing, if it's not consistent with the federal and with a new change in administration change, that could be fluid. They like the current, and wish we could just really codify the current federal law, but then having different, I guess, different things in different states. Yeah, come on up. That was a begging you to come talk.
Thank you, Lord or King. I'm not sure which to use, Mr. Chairman. I'm Nancy Palmer. I'm with the Georgia Chamber of Commerce, and I also have the proxy of Nathan Humphrey with National Federation of Independent Business. Representative Jones has worked with us extensively on this bill. It is greatly improved, and we really do appreciate the work that we've done. You've indicated that our major concern is differing standards at the federal level and the state level, and also amongst different states. We know that the Department of Labor has issued new guidance on independent contractors in January. That's been delayed until we think maybe March. But when those rules are adopted, inevitably, there will be a different standard at Georgia's state level than at the federal level, and that is an additional burden for our businesses and creates confusion in the marketplace. I would love to have a bill that could be more dynamic and allow for us to use that federal standard, but unfortunately, it's just not possible, and so we stand in opposition to the bill.
You've got a question from Representative Park.
Yes, hi.
Hi, so again, if we're looking at, for example, the minimum wage, where the state's minimum wage is lower than the federal minimum wage, would you think that the federal rules on independent contractors would be less burdensome or more burdensome to employers in the state of Georgia, based on just the simple codification of case law from 2012?
I would say the proposed rule as it stands is, actually, it depends a little bit on the interpretation. I would say that the proposed rule as it stands is slightly less burdensome, but in either case, the business community, accepts that there is a standard for independent contractors that will be enforced by the Federal Department of Labor, the National Labor Relations Board, the IRS, DOR to a certain extent, and certainly by the plaintiff's bar, who has an interest in this kind of thing. We're less concerned about the standard and more concerned about consistency between the two.
Just because I think that, if we do pass this and it creates a floor, at least it's a step in the right direction, particularly when it comes to the component of enforcement, to perhaps get all of our employers moving in the right direction to create that level playing field, where if there is more stringent requirements from the Biden administration or from the federal level, again, at least that prepares businesses to be more compliant. Would you not agree with that assessment?
I think it is fair to say that if we were to codify this, we would be indicating to the business community that this is the standard. But I'm not sure that it accomplishes that beyond what case law already has. And again, insofar as we anticipate it'll be different from the federal standard, we would just prefer the one, whichever is more stringent.
Thank you.
You've got a question from the author, Representative Jones.
Thank you for the comments. I appreciate it. As a business owner myself that works we work in all 50 states plus 150 countries. We deal with, I'll say, different laws all the time. I wish everyone would just have the same data law, just for the record, but that's not here.
We'll work on that too.
Thank you. just for clarity for the committee, though, the federal standard that was authored in January was under the Trump administration, correct?
Yes.
Not under the Biden administration?
Yes.
Okay. And then second, in the bill, we're not touching line 42 and 43, where we say such individual and the services performed for wages are subject of an SSA determination by the IRS, which basically means the federal government trumps us, no pun intended. And so it's effectively, if and when, and again, I don't know when the Biden administration is going to do it, if in fact it does happen and the IRS does come in and a company is, determined to have misclassified, then the federal will trump the state, correct?
I'm sure you know of what you speak. May I ask you a question?
Of course.
The Department of Labor is the standard that we're
Mhm.
specifically
Yep.
concerned with, which is not enforced by the IRS, but is instead enforced by DOL audit. So it would be my understanding, you and I neither being employment law attorneys, but at least you're a lawyer.
And I don't like to play one on TV.
For us, our concern is that that Department of Labor audit would be the enforcement mechanism that we're concerned about. And so the IRS trump is insufficient to cover that.
Again, I'm not going to try to be a labor attorney. I don't even try to identify as an attorney, even though I passed the bar. But actually, no, I think the SSA in combination with the IRS and then in combination with the audit, there's a consistency against those. For instance, the Trump administration suggested 4 buckets, not 7 like we have from the
Right.
Sky King decision. But I think that's definitely left to interpretation in the sense to that end for an employment lawyer. But no, I do believe the federal government has to work the DOL and the IRS. 2 of my favorite 3-letter acronyms. So thank you so much.
Thank you.
Any other questions? I got a question for you.
Yes.
So, and I think I guess I'd like for you to go in a little bit more detail because when you say you're opposed to this specific, but you certainly think we need to do something. Could you elaborate a little bit about that, or where do you think we need to head as a committee? Because everybody in this room has said there is a problem.
And we
So,
agree.
yeah, and so where are we lacking? Where, like, is this bill, where do we need to work harder? What sections or parts, what are we lacking to try to get the support, not only of you, but everyone?
Well, I would never imply the committee needs to work harder. And we're going to get into a space where my lack of a law degree might be a small challenge, but we agree that there's an issue. The concern that I have is, one, that there seems to be several sticks out there to fix the issue. We have a federal Department of Labor with an auditing authority. We have an IRS that's concerned about payroll taxes. We have a state DOR that's concerned about payroll tax. We have a state Department of Labor. We have a lot of attorneys who make their money suing businesses over this issue. We have the National Labor Relations Board. And it seems to me that we have all of these sticks out here and we still have a problem. So I fundamentally think that the issue is employee education about what their rights are. Now, where this committee finds a way to interject themselves in that employee education space, that I'm not as sure about. I certainly think that, the State Department of Labor could probably use some more money for some more audits themselves. But I'm concerned kind of fundamentally that there's a lot of people out there that are interested in this issue and looking at it at both the federal and the state level, and yet we're still kind of missing people that are being harmed by this and businesses that are playing unfairly. So as a matter of course, I'm just not so sure that another stick is the way to go. But
Okay. And sorry for putting you on the spot there, but but it did cause a great answer by you, and that is employee knowledge. And I gave the example in my local area about an employee that had 2 employers that were not working by the rules, but he certainly didn't know the rules. Question is, did the employer? Probably. And I just really like your comment about employee education. And I don't know how we fix that part, but maybe that's something else we put on Chairman Todd's plate. Okay. See, once I forced you up here, you got all kind of questions.
That's fine.
Okay. Representative Kirby.
Thank you, Mr. Chairman. You know, having read through the federal proposed standard that it was going to go in effect in March, frozen until May as of right now. And I think Chairman Jones said it well when talking about the 4 buckets versus 7 bucket. I don't remember if it was this meeting or one of the other committee meetings where somebody testified, if you had to ask a question to 2 lawyers, would get 6 or 7 different answers, and that's kind of the way I see it. As I read through what the feds had proposed back in January, I think it's pretty much mirroring this. We're just going into detail on sorting out, separating some of those buckets. I don't really see ours being more onerous than what they were proposing at that time. Now, we don't know what's going to happen in May. It may be frozen and held off again. But at the same time, I think it's very interesting. Here we got the federal government working on it. Of course, we're working on Georgia. We've got things sent to us from, I believe, from you all, from Montana, of all places. I mean, this is something that's going on all over the country. This misclassification is something that needs to be addressed. And as close as we mirror it'd be great if the federal government put theirs in place and it's already there. We could almost just mirror that case law or their wording exactly, rewrite the whole code section, and we'd all be on the same page. But I think we're close enough now. And so my question after all that rambling is, where specifically do you think we're varying from what's in that possible federal standard that's going to cause a problem?
Well, I'm not sure that you are varying from the current federal standard, and I don't know that we would vary significantly from a proposed federal standard. My concern is that we don't know what the federal standard is, and we certainly are under the impression that it's going to change in the next 12 months. I agree with you that that right now the 7 bucket versus the proposed 4 bucket is not radically different. And I think that it is possible that the Biden administration will come up with something that is more stringent. The concern that I have is that we would just fundamentally end up with 2, even if we took it word for word. A federal labor commissioner and a state labor commissioner might interpret them differently. And so for the purposes of streamlining business, we would prefer just having the one standard. But again, we're not denying that there's legitimate concerns out there. And we're certainly, if anyone is going to write a state standard, I would love for Representative Jones to be the one to do it. But unfortunately, we're just concerned about having one in the first place.
Okay, I've got Holly, then McLean online, and then Park. So Representative Holly.
Thank you for facing down a couple of attorneys up here. Okay, so look, we're on equal basis. We're not an attorney. I'm not one. And so I appreciate your points you've expressed, because what it seems like is that this is the recalcitrance to really push this effort is just due to just a fear of the unknown, right? Really don't know what's going to come down from the Biden administration. But I guess with respect to this, being that this literally codifies judgments that have already been made, and and I think to the point though, I know you gave the example in terms of you have like 6 different sticks there, but I know from the previous session, the previous meeting that we had here, we had Commissioner Mark Butler here, and we were able to kind of ask him questions and realize that due to his department having kind of lack of money towards enforcement, as he was asking for investigators, do you find that quite possibly by having this measure in place, which will allow for the State Department of Revenue to be able to get back millions, hundreds of millions of dollars back into the coffers, that actually will allow for Commissioner Butler to be able to go about making sure that there's at least a minimal amount of enforcement? Might that be actually good for the business community, just as in terms of just knowing what we can do right now, realizing that the state of Georgia, particularly in an economy that's still shuddering from a pandemic and trying to on a rebound, that this will at least allow for the Department of Labor to kind of better stabilize its finances, where currently it may have a enforcement mechanism in place, but the money's just not there to help it, for it to function well.
Yeah, so you know of what you speak, and I think that that is actually a fine position to take. And in fact, an earlier version of the bill, I think, directed the fines back to the Department of Labor as opposed to the general fund. And, in general, I don't think that's necessarily a bad idea. We have several agencies that operate that way. I think that you're certainly right that if there was more money in the coffer, it's easier to send some over to the Department of Labor for the types of audits that we want to do. I would also agree with you that as it stands, there's no one that's going to be in violation of law were you to pass this that wouldn't already be in violation. So we're only going to catch bad actors. So I'll have to agree with you on those fronts, but then just reiterate my concern about what the Biden administration may or may not do, and a general concern for businesses that operate in multiple states that we prefer one standard.
Thank you.
Representative McLean.
Thank you, Mr. Chairman. And I just want to say that I'm not a lawyer either. I'm a washed-up football player, even though they tried to say I was a lawyer a couple of weeks ago. I guess where I'm at on this issue is that the employees, which are citizens and the constituents, they're the ones who send us here. I mean, I've got a few thousand people who elected me, and they felt that this has always been a concern, which you've already addressed. My only concern is, I don't know if it's a question or a statement, but as you said, we'll only catch the bad actors, but I do understand the chamber's position, because they've got bad actors that pay and they've got good actors that pay. And sometimes it's good to say neutral or split the fence, but sometimes you got to say right is right and wrong is wrong. And I think that the chamber needs to say to the bad actors, you need to get on board, because I think the chamber knows who are the bad actors. Believe it or not, I think they do.
They're all non-members.
Yeah.
Sounds good. But I just want us to realize that we are elected by the people to make sure that we take care of them. And all I see is this codifying what the law already says. I mean, and all it says is, now who's going to enforce it? That's another story. I mean, we can't enforce what we have, but it's like anything else. But if it's on law, but if it's in law, and it is codified, I do think that we can move forward.
Yeah, and I'll grant that my concern is that more so than catching bad actors, this is going to complicate the playing field for the good actors. I feel that there's several groups out there, agencies, industries that are interested in catching the bad actors, and that they haven't been caught by one of the 12 groups looking for them. I'm concerned that we're just actually complicating the playing field for the good actors. But that said, yes, employees sent y'all here, and there is some abuse that's happening, and it's happening by not leveling the playing field in the labor market and harming certain employees. And I would reiterate that certainly employee education is a big piece of this.
Representative Park.
Thank you, Mr. Chairman. So talking about the employees problem, which I won't assume that it's the chamber's position that this issue is more on employees or that it's their burden, but would you or would the Georgia Chamber be supportive of legislation to require employers to provide employees notification of all of their rights in writing so that they can enforce their ability to be claimed as an independent contractor or an employer or employee, I should say?
I can't say what the chamber, how we would or wouldn't feel about that. We have a member-driven process, so we would have an internal discussion about it. But I will say, on its face, it is pretty standard for there to be regulations of what employers do need to communicate to employees. And generally speaking, we're happy to do that.
Okay, just on that note, I know there is an interesting bill that's been introduced by Representative Marvin Lim, House Bill 181, that would do just that. Make sure that employees do receive in writing all of their rights that do already have to be posted, as you noted.
Well, I can tell you, we have not opposed it.
That's good to know. I will let him know. And hopefully that bill may be able to get a hearing and move forward, if not this session, then next year perhaps.
Yeah, and I talked to him, and I like the idea. That's interesting that you weren't, because I was hearing from folks that thought that was added regulation burdensome. I appreciate you saying that, and we'll both have a conversation with him.
Mr. Chair, if I may
Yeah.
follow up with one or two more questions. Are you aware of California state laws that classify independent contractors versus employees, and how much more burdensome that's been relative to other methods of determining who's an independent contractor versus employee?
I am aware of how much more burdensome they are. So I have heard from some of our multi-state operators that what they refer to as an ABC test, which some states have adopted, including California, that is certainly more onerous than this one proposed, or the proposed federal standard. Yes.
So
It could be worse. Yes.
Right. So particularly in light of that, since there is nothing codified in Georgia law that addresses this issue, would it not be better for the state to move forward with codifying existing case law from 2012 rather than codifying something that may be more onerous to employers?
Well, if I was presented with two bills and one was worse, I would certainly have a bigger reaction to the worse one. But that said, that doesn't alleviate my fundamental concern of adding a standard at all. I really do think that the federal standard is sufficient.
And last question, if I may, Mr. Chairman, just to one of your earlier points of how this issue remains despite all these federal agencies. I would be more of the mindset that creating a penalty or at least an enforcement mechanism, going to Mr. Woodall's point, may actually move the needle forward, as we have seen in other states that have codified one standard or another, whether it's something similar to Sky King or the ABC test, but to ultimately at the state level to provide an additional effort, again, to create an even playing field for the purposes of fair competition that would hopefully drive out the bad actors and, foster innovation, lower prices for consumers, and all of that kind of stuff. But thank you.
Thank you.
Thank you. We've exhausted all the questions.
Are you sure you don't want me to stand up here for just a few more minutes and see if someone else jumps in? Thank you so much for your time. I appreciate it.
Well, thank you. I appreciate all the work you've, just not today, but all the discussions we've had. Okay. Representative Park.
Do pass.
Yeah, I'm very conflicted about that because I never want to, I weigh very heavily what the Chamber and NFIB says. On the other hand, I am very conflicted because when, Tom Kirby, who's HR guy of a Fortune 500, and Todd Jones, who, with his knowledge and work on this, and Sean Marie, I feel like we would not be rewarded. And I think it does move us. Again, this thing has been in study committee since 2013, and we've yet to do anything. And I think, and again, as y'all know, there's a lot of process after this between Rules, House, Chair, Senate, then process starts over. So, and that's why I asked the question, is there something we could improve? And so we've got, 10 more legislative days to work on that. So with that, that's a long answer to yes, I'm going to allow the motion.
Thank you, Mr. Chairman. And I'm sure those who remain who have concerns will continue to work through the legislative process, but at least for the purpose of this committee, I would like to make a motion to do pass.
And I would second that motion, Mr. Chairman.
Okay, and I've heard several seconds. All those in favor say aye. What?
Aye.
Yeah, I don't think there was there was no speaking of amendments or anything, right? Okay. And again, a compliment to Todd and Sean Marie and all those inputs for that. So with that, we've got a motion and a second. All in favor, say aye.
Aye.
All opposed? Motion carries. Thank you all so much. We're adjourned.